Hey everyone, welcome back to Corporate Decoder, where we break down the confusing world of corporate finance with a smidge of sarcastic wit and a whole lot of straight talk. Today we are diving into Atlas Critical Minerals Corporation, ticker symbol ATCX. Get ready, because this filing is packed with promising projects, some high-stakes risks, and a whole lot of numbers that tell a story. Ever wonder how companies prepare to go public, especially in the flashy world of mining? Well, Atlas Critical Minerals Corporation is trying to make that leap, and this document, their registration statement, is the roadmap. Think of it as their big formal hello to the stock market, detailing everything from their business plan to their financial health and, oh yeah, the risks involved. They are looking to raise millions, so naturally, we need to see if this is a golden opportunity or a bit of a gamble. So here we are, looking at a big filing with the Securities and Exchange Commission, or SEC, basically the big brother of the stock market watching over everything. This document is a public declaration, like saying, here we are, world. This is who we are and what we want to do. If you are thinking about investing in Atlas Critical Minerals Corporation, this is where you go to get the real scoop. This registration statement is all about their plan to sell shares of their common stock to the public for the first time. It is a crucial step for any company wanting to trade on major stock exchanges, and it means they are opening their doors to investors like you and me. They have to lay out their entire game plan, the good, the bad, and the potentially ugly. Alright, let's cut to the chase. They are looking to sell 800,000 shares of their common stock. What does that mean? It means they are likely looking for cash to fund their operations, expand their projects, and whatever else a growing company needs. Think of it as them saying, we believe in our future, and we want you to invest in it too. Now, they are upfront about risks. This prospectus is actually full of what they call forward-looking statements. That is corporate speak for, we are making educated guesses about the future. But hey, no guarantees. They are warning us that things could go sideways, and that is putting it mildly. This is a big one. They are an exploration stage company that is like being in the early days of a treasure hunt. They have identified potential spots, but they have absolutely no guarantee that they will actually find anything valuable enough to dig up and sell profitably. So a lot of their money is riding on finding something that is actually worth mining. Ouch, this phrase, substantial doubt about our ability to continue as a going concern, is the auditor's polite way of saying we are not sure if this company will still be around in a year without more money. It is a serious red flag, meaning they really need this offering and possibly more funding down the line to survive. This is a critical point for any potential investor. Because they are new to this whole business model, it is hard for them to predict how they will do. They do not have a long track record to look at. This makes it tough to judge if they are a good bet or a risky venture. Investing in a young company is always a bit of a leap of faith. And Atlas Critical Minerals Corporation is definitely on the younger side of that spectrum. They are also warning us that their stock price could swing wildly. This means the value of your investment could go up or down drastically, and they are explicitly stating that you could lose all your money. That is about as clear a warning as you'll get in a corporate filing and highlights the speculative nature of this investment. Let's talk money. As of the end of 2024, they had lost over $9 million. That is a pretty significant chunk of change that just vanished, and they are not hiding the fact that they expect to keep losing money for a while. This is typical for exploration companies, but it highlights the need for patience and deep pockets if you decide to invest. Now, where are they making money for the year ending the 31st of December 2024? Their total revenue was about $667,000. That might sound like a lot, but in the grand scheme of mining operations, especially compared to their losses, it is a relatively small figure. This revenue comes from their quartzite operation, which they note is their only property currently generating money. And from that revenue, they made a gross profit of roughly $265,000. That means after paying for the direct costs of producing their quartzite, this is what was left. It is positive, which is good, but still far from covering their other significant operating expenses. When you add up all their expenses, including things like paying their staff, administrative costs, and stock-based compensation, their loss from operations for 2024 ballooned to over $1.6 million. That is a steep loss, and it shows how much more they spend than they currently bring in from their operational activities. Looking at their shares outstanding, around 1.1 million shares were being traded. This number is important because it helps determine a company's market value and how much each share represents of the whole company. On the asset side, meaning what the company owns, they had about $2.3 million worth of assets by the end of 2024. This includes things like cash and equipment. Equity, which is essentially the owner's stake in the company, was just over $1.1 million. And their debts or liabilities were around $738,000. So in simple terms, what they owe is less than their equity, but their overall financial picture is still very much in the red. A key factor for this company is currency. They operate in Brazil and deal with Brazilian real, but they report in US dollars. This means if the Brazilian real gets stronger compared to the US dollar, their costs in dollars will go up. It is a constant balancing act and a risk they are exposed to. Now, this is a juicy bit. They are flagging potential conflicts of interest with some of their key people. Mark Fogassa, their CEO, also runs Atlas Lithium. A major shareholder, Rodrigo Menck, the CFO, is also on the board of Atlas Lithium. When people hold top positions in multiple related companies, it can get tricky. Their loyalties might be divided, and decisions made for one company could potentially impact the other, creating issues for investors. Remember that volatility warning. Their stock price has been all over the place, especially before a recent one, for -12 reverse stock split. That split artificially inflates the stock price to meet listing requirements, but it does not magically make the company more valuable. It is a maneuver to look more respectable to stock exchanges. But it can also mask underlying issues. The big goal here is to get listed on the Nasdaq Capital Market, a major stock exchange. This is a big step up from trading on the OTCQB listing on Nasdaq, brings more visibility, potentially more investors, and a greater sense of legitimacy. However, they admit there is no guarantee they will be approved, and they might not even go through with this offering if they don't get that listing. Let's look at the leadership. Mark Fogassa is listed as the founder, chairman, and CEO. He's also running Atlas Lithium. He's got impressive educational credentials from IIT and Harvard, but his direct experience seems to be heavily focused on executive management and capital markets. His dual roles are definitely a point of interest for assessing company direction. As we mentioned, his dual role is a key concern, and the filing explicitly states it. This is not just an observation, it is a formalized risk they are presenting. They have to disclose this because of the potential impact on future decisions and shareholder interests. Regarding the board, they currently have 2 independent directors. Nasdaq rules usually require a majority of the board to be independent, and they are acknowledging they will use phase-in provisions to meet this requirement. This means for now a significant portion of the decision makers might not be fully independent, which is another governance point worth noting. Going back to the money for 2024, their quartzite operation generated about $748,000 in gross revenue and a gross profit of around $265,000. This is where their actual sales are happening right now. The gross profit margin of about 35% isn't terrible, but it is a long way from covering the company's overall expenses and losses. Here is an important update: their sole revenue generating operation, the quartzite quarry, is currently paused. They are making modifications mainly to deal with drainage issues. They expect to resume operations by year-end 2025, but this pause means no revenue from that source for a significant period. When you look at cash flow for the year 2024, they used about $846,000 in cash just to keep the lights on and run their operations. This means even before investing in future projects, their day-to-day business is costing them more than it is bringing in. Looking at their financials pro forma, meaning as if certain events had happened earlier, for December 2023, their total assets were around $1.5 million, and their liabilities were about $181,000. This pro forma view tries to give us a clearer picture of what the company might look like if recent changes were already in effect. Their equity in this pro forma view was about $1.3 million. This suggests a healthier balance sheet if these past events were considered historical. They also discuss how they came up with the price for buying shares. It is not just a random number, it involves looking at their company's potential, the industry, their financial performance, and what other similar companies are worth. They are also factoring in market demand. Here is a critical point for anyone buying into this offering. They are warning about dilution. This means when you buy shares, the value of your stake in the company's tangible assets decreases because more shares are being issued. They calculated that new investors will face immediate dilution. That is a direct hit to the immediate value of your investment. The big question, what will they do with the money? They estimate raising about $7.1 million from this offering. This is the capital they will use to fuel their future growth. A good chunk of that money, about $500,000, is earmarked for studies on their rare earth projects. This is a smart move for an exploration company, as it is about gathering more information to figure out if these projects are worth developing further. They are also allocating $1 million to their natural graphite project. The underwriters, the folks helping them sell the shares, have an option to buy more shares if there is extra demand. This is a standard practice and shows they believe in the offering. They might buy up to an extra 120,000 shares. Now let's dig into the actual financial statements. These are the hard numbers that show how the company has been performing. In 2024, they reported a gross profit of about $265,000. This is from selling their quartzite. It is a positive number, which is good to see. However, when you look at the bottom line, the net loss for 2024 was almost $1.7 million. This shows that even with some revenue from quartzite, the expenses of running the company, especially exploration and administrative costs, are far outweighing that income. For 2024, the average number of common shares outstanding was about 1.1 million. This is the base number we use to calculate per share figures. And then there is this foreign currency translation adjustment, a loss of about $63,000. This shows how currency fluctuations in Brazil are impacting their overall financial picture when converted to US dollars. Moving on to the balance sheet, this is a snapshot of what the company owns and owes at a specific point in time. At the end of 2024, they had about $396,000 in cash. This is the liquid money they have on hand. It is not a huge amount, which underscores their need for this offering to boost their cash reserves. A big number here, $872,000 in related party transactions. This essentially means money owed to or from companies linked to Atlas Critical Minerals, often due to shared ownership or management. It is crucial to understand these transactions as they can sometimes signal preferential treatment or potential conflicts of interest. Their total stockholders' equity at the end of 2024 was about $1.1 million. This represents the owner's stake in the company. And finally, the cash flow statement. This shows where the company's cash came from and where it went. For 2024, they used about $846,000 in cash for their operating activities. This is the cash burn to keep the business running on a day-to-day basis. On the flip side, they got about $1.3 million from financing activities, mostly by selling more stock. This shows they are relying on external funding to stay afloat. So, what is the verdict on Atlas Critical Minerals Corporation? They are in a high-risk, high-reward industry. And they are very upfront about the significant financial challenges they face. They have promising exploration projects for critical minerals which are in high demand, but they are still very much in the early stages. Their current revenue from quartzite is minimal compared to their losses. And they are heavily reliant on external funding to survive and grow. The leadership's ties to Atlas Lithium also present a recurring theme of potential conflicts of interest that investors should keep a close eye on. The reverse stock split is a common tactic to meet listing requirements, but it does not inherently improve the company's value. The key will be whether they can successfully execute their exploration plans, find economically viable mineral deposits, and navigate the complex regulatory and market landscapes. For now, this is a speculative investment leaning towards risk. Alright, that is our deep dive into Atlas Critical Minerals Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to join the conversation on our Discord server linked in the description below. Thanks for watching. See you next time.